Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Appreciate you joining. Let's discuss, does Vanguard Solo 401k support Mega Backdoor Roth Solo 401k? So, as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you're on the YouTube channel, please like if you find this to be helpful so we can help get the word out to other solopreneurs and get this valuable information out to other solopreneurs just like you. Please subscribe as we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. You can see, for example, tomorrow we'll be here to discuss, along with your questions, of course, because if you have questions, please chat those over. We love to talk about these topics, so we love to just field questions. But we'll have some prepared content in the morning, which is going to be how to borrow from your Fidelity Solo 401k. And then we'll be back in the afternoon to discuss, does E-Trade Solo 401k support Mega Backdoor Roth Solo 401k? But let's jump into today's topic, which is, again, does Vanguard Solo 401k support Mega Backdoor Roth Solo 401k? So it's always good to start out with the basics, which is, a Solo 401k is for a self-employed individual. So a solopreneur, a solo practicing professional like an attorney or CPA. The key is that you're self-employed with no non-owner, non-spouse W-2 employees. So you could have a spouse working in your business and you could still have a solo 401k as long as you don't have other people that are working as full-time W-2 employees. You could operate as a sole proprietorship, or you could have a formal legal entity like an LLC or an S Corp. The key is that you report that earned self-employment income, right? That could be income on Schedule C if your business is taxed as a sole proprietorship, income on a W-2 if your business is taxed as an S Corp, just to give a couple of examples. You don't need technically any type of minimum earned self-employment income to be eligible. It's not like a solo 401k is just for a super successful business. It could be a micro business. Your spouse or business partner could participate as long as your spouse or business partner are reporting their own earned self-employment income. You could have a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer sponsor plan. Now, one of the top reasons that customers sign up with us is the ability to make what are called mega backdoor Roth contributions. So with a mega backdoor Roth contribution, individuals are able to contribute all the way up to the overall limit as a Roth and mega backdoor Roth contributions, where ultimately that money is in your Roth Solo 401k. It's growing with that potential for tax-free growth, just like any Roth account, so that when you retire, you got the potential to take out all the gains totally tax-free. So for example, for those that are setting up a plan here in 2025, the overall limit is $70,000 or $77,500 if age 50 or older, or $81,250 if age 60 to 63. Now, the key is that you, number one, have to be eligible. So again, that's self-employed with no full-time W-2 employees. Then find a provider like us that allows for the mega backdoor Roth. So mega backdoor Roth is more of a marketing term. Technically, what you're doing is you're making voluntary after-tax contributions and then transferring those voluntary after-tax contributions either to a Roth Solo 401k or Roth IRA. So the rules allow that, but you also need to have a provider whose plan documents allow that. And then you also want to work with a provider like us that will assist with all the technical steps, right? Assist with establishing the required sub-accounts. Because when you make those separate voluntary after-tax contributions, they need to first go into a separate voluntary after-tax account before they get moved over to the Roth account. Again, either the Roth Solo 401k or Roth IRA. Now, while that first step, that contribution is not reportable, the second step, when you move it from the after-tax to the Roth, is reportable on a Form 1099-R. And we handle that Form 1099-R as an optional free service. In other words, no additional charge for our customers. So you'll end up with multiple accounts. Like here's a good image showing 3 accounts for one participant, right? The person has a pre-tax, a Roth, and then an after-tax. Here's an image where there's 2 participants, right? Let's say it's a husband and wife. that are both working in the same business, both participating in the plan. If each person is making those mega backdoor Roth contributions, each person's going to have 3 accounts for a total of 6 accounts. And here's an image that shows the individual that instead of transferring the after-tax money in the plan to the Roth solo 401k, they decide to exercise the option to transfer it out of the plan to a Roth IRA. So they might just have 2 accounts for the solo 401k, pre-tax and after-tax. Then they move the after-tax money out of the plan to the Roth IRA. Or if they're only making those after-tax contributions, they might just have 1 account. They might just have the after-tax account. So now that takes us to Vanguard. So Vanguard does offer their own individual 401k, or to be specific, they really just send it out to a census. They used to offer it last year and then they got out of the business. They still offer it on their website, but they're really just routing those inquiries over to a census because they ended up selling their whole book of business to a census. So now the question becomes, okay, well, does Vanguard allow for the mega backdoor Roth solo 401k? And the answer is, number one, Vanguard doesn't even offer a solo 401k anymore. They now route individuals over to a census. But then number two, a census doesn't allow for the mega backdoor Roth. So here's a good chart that shows the difference between getting a solo 401k through Vanguard, which is really getting an individual plan over at a census, what they call their census individual K, and then getting a plan through a provider like us. Because remember, I said the key is you first have to be eligible, then you have to find a provider who supports the mega backdoor Roth. So what we do, it's one of the top reasons that customers sign up with us. So we're steeped in experience. We have all the compliance support that's needed, all the technical knowledge. We provide the 1099-R, et cetera, that's needed as part of that process. So the answer to the question is no, right? Vanguard's plan, which again is really a census's plan, does not support the mega backdoor Roth solo 401k. So if you ended up signing up with a plan at Vanguard, you could still upgrade to our plan. And now you'd be able to make the mega backdoor Roth contributions, right? Now you'd have all that technical support for going through the process, doing the 1099-R, and then you would get all the other benefits that come along with upgrading to our plan, right? For example, the ability to invest in a wide range of not only brokerage type investments, because the Vanguard solo 401k, which is really the census individual K, is going to be limited to certain Vanguard mutual funds. Whereas our plan, customers can open up their account at the bank or brokerage of choice. For example, top brokerage options are Fidelity, Schwab, where it's totally open architecture. So they're able to invest in a wide range of brokerage type investments, whether it's stocks, bonds, mutual funds. But in addition to that, our plan allows for investing in true alternative investments like real estate, like crypto, precious metals, private placements, etc. And we, of course, provide tremendous support in answering those questions regarding how to make those alternative investments. Other features that would be available under our plan that's not available under the Vanguard solo 401k, which is really the census individual K, is the ability to take a 401k participant loan. So this could be used for an emergency purpose or any purpose. It doesn't have to be an emergency, where the individual can borrow money from their own 401k. It's not going to be subject to taxes or penalties as long as it's documented as a loan, which we handle the loan documentation requirements as part of our service for no additional charge, and paid back according to those loan terms. Has to be paid back in monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. In terms of fees, number one, our plan makes a self-employed business eligible to claim $1,500 in solo 401k tax credits. That's going to more than cover our fees for the first 7 years. Whereas the Vanguard plan that they offer on their website, which is again is really routed out to a census, they charge $20 per participant and $20 per mutual fund on an annual basis. Whereas we charge $650 as our initial fee, which includes the $525 establishment fee, plus the first $125 annual fee. Keep in mind that's for the whole plan. So if there's multiple participants, multiple accounts, multiple investments, it's still that one flat fee. Going forward, we charge $125 a year. That would start on the anniversary date. So for example, this time next year, $125, that would cover the second year. But again, those $1,500 in tax credits, that's going to more than cover those fees. Like if you added up those fees for 7 years, it wouldn't amount to $1,500. So again, the alternative investments, the compliance support, the tax credit, and then you have the ability to open up accounts at the bank or brokerage of choice. You're not just limited to having accounts at a census where you're limited to investing in just a certain list of Vanguard mutual funds. So hopefully that helps connect the dots as far as what it takes to be able to make those mega backdoor Roth contributions. We've got some other content we wanted to share. Let's go to some of the questions, though. We'll come back to the content in a moment. Thank you so much for bringing the questions. We always appreciate the chance to discuss these topics. And again, if you're finding this content to be helpful, we'd really appreciate it if you liked the video, as it helps us get the word out to other self-employed individuals, other solopreneurs, just like you, so they can get this valuable information. So backdoor Roth funds, can they be combined with pre-tax funds when making an investment, as long as the gains are properly tracked? Pre-tax, $90 pre-tax and $10 Roth are invested. You make $10, $1 goes to Roth, $9 goes to pre-tax. In short, yes, it's certainly possible to pool your money together to invest, right? A lot of times we see that with alternative investments, right? Let's say somebody wants to invest in real estate or a private placement or a note, right? Where they're lending money from their solo 401k to an unrelated person. So really, it's just one entity that's making that investment. It's one entity that's investing in that note or that real estate. It's the solo 401k. It's the retirement trust. And so the fact that funds are being used from different sub-accounts, like the pre-tax and the Roth, that's going to be tracked at the plan level. So from an investment title perspective, just the solo 401k trust is listed on the title. When the individual goes to make the investments, they're going to transfer money from both accounts, right? Part of the money is transferred from the pre-tax, part of the money is transferred from the Roth. Going forward, for administrative ease, all the income and expenses related to that investment can go in and out of just one of those accounts, like say the pre-tax account in this simple example. And then the individual would just want to reconcile between the two accounts, right? After expenses, the net proceeds, the net return on that investment would just be allocated over in accordance with those investment percentages. So in this case, 10% of the net return on that investment would then just be allocated over to the Roth account. And the individual would want to certainly do that allocation at least once per year, and certainly before they took any type of distribution or loan, etc. Hopefully that helps. Great question. So thank you so much for the good question. So we have a little bit more time. Thank you for the good participation. We do highlight some of the other resources. We have a community with over 30,000 members. It's a vibrant community. Folks are posting questions throughout the day on our forums. It's a great way to learn, to share the knowledge. We have the industry's first AI, which is a great way to quickly find resources and answer questions. You're welcome to use it at solo401k.ai. And then obviously these webinars, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, back again at 1 p.m. Pacific, 4 p.m. Eastern. So another hot topic this time of year is going to be the ability to still open up an account and make contributions for 2024. So there is, as a matter of fact, still time to open up an account. Now, what the deadlines are going to depend on how the self-employed business is taxed. So for example, for a business that's taxed as a sole proprietorship, could be an LLC taxed as a sole proprietorship. Even if that person had not signed up with us or otherwise set up a plan, like for example, they hadn't set up a plan, a basic plan at Fidelity or Schwab before the end of last year, they could still set up a plan here in 2025 and make all types of contributions for 2024, including employee contributions for 2024, as long as they set up the plan in time to make those employee contributions by April 15th. Now, if they file a timely extension for their business tax return, in other words, their 1040 for a business that is taxed as a sole proprietorship, that'll give them even more time to make employer and voluntary after-tax contributions, because if they do file that timely extension, they could still set up a plan here in 2025 and make both employer and voluntary after-tax contributions by that extended tax return deadline, in other words, October 15th. Now, for all other business types, could be a partnership, could be an S Corp, could be a C Corp. If the individual signed up with us or set up a basic plan somewhere else before the end of last year, then they could still upgrade to our plan and make all types of contributions for 2024 by the business tax return deadline, including extension. But if they didn't set up a plan with us or someone else before the end of last year, and now they're just setting up a new plan here in 2025, it's too late to make employee contributions for 2024, but there's still time to set up a plan and make either employer or voluntary after-tax contributions, as long as they do so by their business tax return deadline, including extension. So let's say their business is taxed as an S Corp, and they filed a timely extension for their 1120S, so that now they have until September 15th to open up a plan and make either employer and or voluntary after-tax contributions for 2024 by that extended tax return deadline. So hopefully that helps. Thank you so much for the great participation. Please continue to participate. Again, if you found this information helpful, please like. It helps us get the word out to other solopreneurs just like you. Please continue to engage. We'll be back tomorrow, for example, to discuss how to borrow from your Fidelity Solo 401k in the morning, then back in the afternoon to discuss whether E-Trade Solo 401k now supports Mega Backdoor Roth Solo 401k. All right. Thank you so much, everyone. All the best. We appreciate